Bitcoin is preparing for a major directional move in the next few days. Will this directional move take Bitcoin over 58,000 and thus continuing upwards, or are the bears going to hammer Bitcoin down one final time? This is a major question we're going to be diving deep into in today's video. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are diving deep into the short-term and daily charts, discussing the recent daily candle close, what is happening for Bitcoin, and what you should be expecting moving forward into the upcoming weekend. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to a variety of charts, updates, analysis, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Every single trade we post has the exact entry prices, targets, and stop losses. We also have a group chat with our general chat, our trading chart and education chat, our news, our trade setup, our help, our daily video chat, and everything you need to go ahead and execute the trades and follow the channel explicitly. If you are interested in all of that, contact me in the pinned comment of the free channel by clicking my name or these links for more information. Without further ado, guys, let's dive on into the video. So taking a brief look at the last 24 hours of price action, we can see that daily candle has closed out again, and unfortunately, even with the bullish CPI data, the selling pressure for Bitcoin is still very much apparent, pushing Bitcoin back underneath for the second day in a row that 200 SMA, meaning we have closed under the 200 SMA 2 days in a row now, failing to break above. We can see two massive long wicks toward the upside, but no ability to sustain above this level. Taking a brief look on the shorter time frame, with that, we can see that we have actually also failed to close above that bullish trigger point, this 58.3k level, the point at which we need to close above to see that directional continuation upwards. We have not done so yet. So we'll be discussing in massive detail what is happening and what is important about these charts in just a moment. Moving over to the broader data over here, the 24-hour volume is up 11%, sitting at 117 billion. 24-hour liquidations sitting at 128 million. Of the 128 million, we have 87 million coming from long positions and 40 million coming from short positions. If we go ahead and jump over to the DXY now, we can see the DXY has taken a little bit of a beating. Of course, the DXY dropped down a little bit as a consequence of the bullish CPI data. And as we know, if CPI data comes out bullish, it's an indication inflation is dropping. If inflation is dropping, the dollar loses value. So we can see here, as our annotations from yesterday's video, we expected that retracement back down to that range low, our sell side liquidity over here, our liquidity range at around 104, and we have seen that. So we came back down and we touched that level absolutely perfectly. With that, we are expecting continuations downward for the DXY into this next high time frame level of support, and even to retest that prior sell side liquidity at 102. Again, for the DXY to flip bullish, we would need to see a breakout of this 8-month-long downtrend. Taking a preliminary look here at the data, this is going to be our upcoming interest rate probabilities. You can see there's an 84% probability we do see a rate cut moving into the September interest rate decision. With that, we also have our Federal Reserve Jerome Powell speech on the 16th of July. This is going to be a massive event. And our most upcoming news, we do have our PPI data coming out today in about 12 hours. That is going to, again, be very leading for inflation and quite important at determining where we could see these probabilities move towards. So expect volatility and expect the price action to move around quite a considerable amount moving into and during these economic releases. Moving over to the broader markets, the S&P 500 more or less looking very the same over here. We did see a short-term correction here on the S&P 500. Again, we have to come back to that notion of perceived systematic risk. When we have an expected result, or when we know interest rates are going to see a pivot downwards or a reduction, the desirability of front-running these moves decrease. Remember, the market moves on perceived systematic risk. What is the perception of risk in a future period? The market is also future seeing, so it likes to front run news events. Just as when we have the risk of interest rates rising, or the risk of inflation rising, we see sell-offs prior to the event. When we see the risk of interest rates dropping and again inflation dropping, we sometimes do see sell-offs in anticipation of those events as well. We see profit taking in anticipation of those bullish events. So we did see a little bit of a correction here on the S&P 500 and for Bitcoin, but the macro outlook for the outcome of the events of which interest rates reduce is still going to be macro bullish in terms of the overall directional expectations for risk assets. Again, if we go ahead and take a look at our simple flow chart over here, a very simple flow chart, we can see that if interest rates generally reduce, okay, although the short-term reaction of interest rates reducing have historically been a correction in the financial markets as a consequence of profit taking, because again, by very misleading news, the eventual high time frame or macro implications of lower interest rates are very bullish. So debt to service ratios, or other financial analytical ratios, whatever we're looking at, start to fall, become healthier. This frees up available cash flow for companies to reinvest in risk assets, which pushes the financial markets up. Again, when interest rates drop, we see a general reduction in costs of goods and services. Obviously, interest rates, costs and services decrease. And with that decrease in costs and goods and services, we see available household cash flow decrease. Again, if we have short or long-term debt obligations decreasing, the cash flow will increase for households as well. And then we see that money flow into the market. So the general bigger picture of a reduction in interest rates is going to definitely be bullish for risk assets, but the short-term build up into those events could potentially see short-term corrections. Let's go ahead and jump over to Bitcoin now. A quick word from today's video sponsor. Before we do, go ahead and check them out for 15% off your trading fees for life and $5,000 in bonus rewards. Check them out and we'll go ahead and jump into Bitcoin. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's get stuck right into Bitcoin, and we're going to try to keep this one nice and short and sharp, get straight to the point. So let's dive in. As we can see, Bitcoin is still underneath this downtrending diagonal resistance. The downtrending diagonal resistance is represented by this black downtrending level over here. I'll go ahead and make it a little thicker so we can see it. This is a representation of the trajectory of price action over the last 6 or so weeks. While we are underneath this level, Bitcoin is still technically in a downtrend. So while we are in a downtrend, we could expect further continuations into our nearest levels of support. So worst case scenario for Bitcoin, we could see another correction to come down and fill up this VRPV gap around 53,000. Again, this $53,000 area is a major level of support. We could see a correction to short term toward the downside. That is going to be our downside risk. While we are sitting between our major area of support at 53,000 and our 58.3k resistance, we are in an area of caution. This is basically no man's land. This is an area of which Bitcoin will make a determined directional decision in regards to where Bitcoin is going to move to over the coming weeks. If we break below our major support, we enter macro bearish range targeting 44,000. We'll justify that on the macro in just a moment. If we are able to sustain above this short-term bullish trigger at 58.3. We're looking for a daily candle close above it. We are looking for a daily candle close, okay? This is a daily chart. If we're able to sustain above this level, that would be a strong indication that Bitcoin is likely going to break out of our downtrend and see a directional move to 64,000. A breakout of this horizontal resistance, our sell side liquidity, this horizontal resistance will facilitate Bitcoin being able to break past the 200 SMA on that daily chart and continue back above that bull market support band, marking this as deviation and thus a continuation to range high. So taking another look at that short-term price action, the key level we do still need to see a breakout of, like we've been saying for the last 5 days, is going to be 58.3k. A break of this region on the daily will facilitate a break of our downtrend and thus a directional continuation to 63.1 to 63.8. That is the next level of resistance after the breakout of this downtrend. If we are able to break above 63.1 to 63.8, we will see a strong directional move toward the range high, which is going to be the $72,000 region. Again, the prior time we broke above that 63.1 region, we saw a strong directional move to 72. We would expect a similar reaction as to what we saw over here in the current price action. Now, with that being said, guys, if we are able to break above 72k, well, we go to a new all-time high. That is obvious, that is a fact. So let's take a look now at the short-term price action, because as we said, while we sit underneath 58.3, we are still in a danger zone. We're in this danger zone over here, which is underneath this major level of resistance. So let's take a look on the short term and discuss what Bitcoin could potentially do moving forward over the coming days. So what we can see here on the short term, this is the 4-hour chart. We can see here we do have a major area of support, short-term support, at this region of liquidity around 55,000 to 54.2k. This likely next directional move for Bitcoin is going to be down on the short term. That is what we're looking for. We're looking for a bounce anywhere between this area of liquidity and that $53,000 area of support before we see directional continuations back up to retest that downtrending resistance. Of course, during this time frame, we have also got that PPI data, so that could play a massive role in determining where Bitcoin does go over the next 24 hours. We could see significant directional shifts that we may not have predicted or foreseen prior to this data release. Of course, the market moves on data and we don't have public access to that data before it does come out. So therefore, we are only speculating as to what that release will be. And if we're making decisions based on speculation, it is a degree of gamble. So we do have to be aware of that. It's sometimes better to wait for that information to become public, assess that information, wait for the algorithmic traders to finish, the bot traders to finish pushing the price, and then see how the price is settled in the direction of which it wants to move. So that is it for the short term, guys. Be aware of the possible downside move. The possibility for continuations lower here is very much likely. We will not be properly bullish here on the short term until Bitcoin is able to validate these bullish triggers, as we've been saying for the last few days. Yes, Bitcoin has bounced very well from 53,000. Yes, we are seeing some potential strength develop. We have bullish divergences on the daily over here. We can see Bitcoin is attempting to push upwards. However, we have not really broken over those levels and shown any real we have not seen the price action sustain. We'll just say that above those key levels there to give any confidence back in the fact that the buyers are back in control. So that is what to be aware of. Watch how that develops. If we break through this level, that is when we are definitely expecting continuations back upwards. While we're in this range, be aware, potential chop, potential sideways price action, potential corrections are very, very realistic. Moving over to the total. So unfortunately, guys, the total 3 was looking really good yesterday. Upon the breakout of 58.3, we saw a fantastic positive momentum shift on that total. I'll go ahead and bring it up over here. There it is. You can see on the screen over here. We saw a really nice positive momentum shift, or at least an attempt at a positive momentum shift. Of course, this is a 3-day chart, meaning we would have to have that RSI close above this level on the 3-day to validate the positive momentum shift, but it was looking pretty decent. As a consequence of the market pulling back slightly, we have seen that RSI drop below with 2 days remaining here on that close, we would like to see in the next 2 days the RSI breach this downtrend. That would be a strong indication that altcoins are going to see a strong recovery. Until we see that breakout, we could potentially see altcoin market come back down to retest that low $500 billion level again before we have that continuation high. Again, if we do break out of that downtrend diagonal, we would no longer expect to see that short-term pullback. So we're in that same situation, that situation of decision, waiting for those triggers. If you are acting now, you are acting prematurely, you are acting in anticipation. It's sometimes better to act in reaction to validated events instead of to act in anticipation of unconfirmed events. You're taking more of a gamble, particularly in periods of uncertainty, when there's a lot of the news events, a lot of stuff externally going on with the German situation and Mt. Gox situation that could potentially drive the price against you or even for you. But either way, it will require a degree of coincidence or luck. So let's go ahead now and jump over to the total 2. The total 2 is a very similar situation here to the total 3. We are looking at bounces between the lows. While we remain underneath that dashed trend line, we are still expecting potential corrections. If we break above that dashed trend line, that is when the bulls fully reclaim control and we expect continuations higher. So we'll say this, break above the dashed trend line, we expect not only a continuation higher, we expect a breakout of this multi-month downtrend. The same goes for the total 3. You break that dash trend line, we expect a breakout of this multi-month downtrend. So very, very significant potential move coming up. Looking at the broader charts over here, the weekly charts, we can see from a weekly perspective, we have some pretty key levels over here. I'm going to go ahead and actually just talk about some of these levels over here. This is going to be, this red line right here is going to be our 50 EMA. It is my inputs over here, EMA 8, so it's going to be adjusted to 50. The 50 EMA is lining up very, very well with the super trend low. That lines up at a price point around $52,000. The $52,000 region actually sits within this area of support. So it does tell us once again, you can see the 52,000 region right here, we have still got that major support level, which I've gone ahead and annotated right over here to actually back us up. And therefore, we don't really expect us to see any more bearish moves downwards on the macro unless that $52,000 region is particularly lost. So it brings us back to that initial point, right? We're in this no man's land. We're in this decision zone. We're not really properly short-term bullish. We're not really properly bearish right now. We're kind of in the middle of the two. We're in a decision zone. Bitcoin's going to have to make a decision of where it wants to go, and then we follow along that directional move. So taking a look again over here on the weekly, a loss of this level, guys, right over here would result in continuations down. The last time we saw a loss of the super trend low and the 50 EMA at the same time, okay, was back over here in December 2021 at 45,000. That resulted in a directional continuation in the price charts. Let's go ahead and take a look at if we can see another scenario of a loss of both of these levels. We do see another scenario here just before that COVID correction where we do lose those two levels. We saw a steep correction again. That was a COVID correction, so we can't take that one at face value. It was a black swan event. But nevertheless, we can see both a loss of the 50 and a super trend low is a good indication that the overall directional expectations have shifted downwards. The same goes for the RSI here, guys. If we do lose this local low of the RSI, this is going to be very, very bearish, as this low over here marks the start of the bull market. This was the start of the bull market, this low. So a loss of that low on the RSI would indicate that momentum has dropped to sub bull run start levels, and we could see directional continuations down again through those levels for both the price action and the RSI. While we remain above this level, we have still got hope for the bulls to push that RSI back upwards, and again, to push that price action back upwards. So personally, I'm not going into the next few days with strong expectations. I'm aware of the key levels. I'm aware of the trigger points. I'm aware of accumulation zones. I'm aware of potential reactions if these levels are broken, and I will act accordingly. Right now, I am much more cautious and much more sitting back and watching things happen before reacting personally. That is how I'm playing it. However you want to play it, you can go ahead and make that decision yourself. But personally, while we are right next to these trigger points, I'd rather wait a few percent to get that confirmation before we expect continuations or whatever. Or on the same with the downside, wait for those corrections into that support before I start bidding again down here, instead of just going ahead and aping in right where we are now between our validations on both sides. Thanks for watching. Have a fantastic day. We'll catch you guys in the next one. See you then. Bye.